Trend lines. Trend lines are simple, diagonal, or angled areas of support and resistance. Trend lines are one of my favorite trading tools. I find them to be very reliable and always easy to use. Trend lines are used when the market is moving either up or down. They can be used over a large period of time, many candles, or they can be used over a shorter period of time, fewer candles. Implementing them in the Forex Income Boss system, I use trend lines over a shorter period of time, over fewer candles. This gives me much more relevant areas of support and resistance that I can base a trade decision on. Trend lines are counter-trend in nature. When the price is dropping, a trend line will help us decide to take a long trade. And when the price is rising, a trend line will help us determine the best time to take a short trade. In order to draw a trend line, we'll need 2 points of reference. We need to be connecting either two highs or two lows that the market's made. The ideal trend lines for this system are drawn when connecting two consecutive highs or two consecutive lows, one right after the other. In order to use a trend line to facilitate a trade, the price will need to close past the trend line in the desirable direction. Since trend lines are indeed areas of support and resistance, the price will have a strong tendency to reach to and then bounce off a trend line. With this being the case, we want to see the price close past the trend line to confirm a move in the proper direction. In a downward moving market, we'll be drawing a trend line across the top of the price. The trend line will connect the highs as they are getting progressively lower. In a downtrend, the trend line will also be sloping downwards across the top of the price. In an upward moving market, we will be drawing a trend line across the bottom of the price. The trend line will connect the lows as they are getting progressively higher. In an uptrend, the trend line will also be sloping upwards across the bottom of the price. A bullish trend line. We want to connect two consecutive highs in a downward moving market. When I say a downward moving market, all I mean by that is we want to see one high followed by a second high that is lower than the first. This can occur in an uptrend or a downtrend. All we are looking for is a high followed by a lower high. Once we spot our high followed by a lower high, we will draw the trend line across the tops connecting the peaks. We will be looking for the price to move up and either bounce off the trend line and continue its move down, or for the price to close above the trend line, signaling the move of the market to go higher. It's this close above the trend line that we're looking for in order to confirm a long trade. Price makes a high followed by a lower high. These 2 points are connected and the trend line is projected ahead of the price. Price pulls back to the trend line. At this point, price could possibly bounce off the trend line and continue to move down. Or price can break through the trend line, suggesting a move upwards. Once the price closes above the trend line, we get the confirmation that the long trade we're looking for is a good trade. Bearish trendline. We want to connect two consecutive lows in an upward moving market. When I say an upward moving market, all I mean by that is that we want to see one low followed by a second low that is higher than the first. This can occur in an overall uptrend or downtrend. All we're looking for is a low followed by a higher low. Once we spot our low followed by a higher low, we will draw the trend line across the bottoms connecting the valleys. We'll be looking for the price to move down and either bounce off the trend line and continue its move up, or for the price to close below the trend line, signaling a move by the market to go lower. It's this close below the trend line that we're looking for in order to confirm a short trade. Price makes a low followed by a higher low. These points are connected and the trend line is projected ahead of the price. Price pulls back to the trend line. At this point, price could possibly bounce off the trend line and continue to move upwards. Or price can break through the trend line, suggesting a move downwards. Once the price closes below the trend line, we get the confirmation that the short trade we're looking for is a good trade. Paying attention to trend lines is going to help you create better results in your trading. You'll better know what trades you can take, what not to take, and what trades you should wait on. Thank you for watching.